So let's talk about that massive crash in the precious metals market that shocked just about everyone. What if it wasn't a random market event? Today we're diving into a source's really provocative theory that says this wasn't a crash at all. It was a planned, scripted demolition.
It all starts with this number, and it is absolutely staggering. According to our source, $10 trillion of wealth just vanished in 72 hours, wiped clean off the screens around the globe like it was never even there.
And this is a key point the source makes right away. They say we shouldn't even call it a crash because that implies it was some kind of accident. No, they frame this as something deliberate, a controlled event, an execution carried out with almost military precision.
So that brings us to the big mystery, right? How on earth does that much money disappear with no warning, no huge global event to set it off, and just crickets from official channels? Well, let's unpack the source's step-by-step argument for how they claim this whole thing was scripted from the start.
Okay, first, let's just wrap our heads around the sheer speed and the scale of the collapse itself. The source really hammers this point home. The velocity, how fast this all happened, is a major clue that something was, well, not normal.
I mean, just look at these numbers. A 15% drop in gold is huge. A 40% drop in silver is catastrophic. To see that happen over a week would be shocking, but this all went down in just 6 hours. The source points out there was no new war, no banking system collapse, no pandemic announced, none of the usual suspects. The market just fell off a cliff.
All right, now let's get to the core of this theory. The source lays out a really precise 3-day timeline that they argue was basically designed to lure traders into a massive trap right before snapping it shut.
So the sequence here is everything. On Tuesday, the president hints at a weak dollar, which for gold and silver is like pouring rocket fuel on a fire. By Thursday, the market is absolutely euphoric. Silver hits an insane $121 an ounce. And then Friday morning, bam, a complete violent reversal, all triggered by a single political appointment.
You can really see the trap in action here. On Tuesday, you bait the hook with a weak dollar signal. Traders, logically, pile into gold and silver. Then, just 72 hours later, you completely reverse course by appointing a Fed chair who is famous for wanting the exact opposite. The source claims this wasn't some clumsy mistake. It was a calculated pincer movement designed to force a massive, panicked sell-off.
But this theory doesn't just stop with the White House. The source identifies a couple of other really powerful players whose actions, they claim, were timed perfectly to make sure this demolition didn't just work, but was a spectacular success. Two key players are put under the microscope. First, China. They're usually the biggest buyer of physical silver in the world, the ones who put a floor under the price. But according to the source, they stepped away at the exact moment the selling started, basically pulling the safety net out from under the market. And second, the CME Group, the exchange that controls futures trading. They'd been quietly making it more and more expensive for traders to hold their positions, setting the stage for a forced liquidation once the panic hit.
Okay, this is where the source says they have the smoking gun. The hard data that, in their view, proves this was all a game played with paper contracts totally disconnected from what was happening in the real world with actual metal.
Take a look at this number, 531 tons. On the day of the crash, that's the volume of silver contracts that were traded on the Shanghai exchange. That's an incredible amount. It looks like a massive wave of selling, right?
But here is the massive twist. The source actually dug into the vault data, and while 531 tons of paper silver changed hands, you know how much physical metal was actually moved? Zero. Nothing. Not a single gram. The entire price collapse, they argue, was driven by paper trading that had no basis in physical reality. And this is the crazy result. On the exact same day, the paper price for silver in New York was $84. But if you wanted to buy an actual, physical bar of silver in Shanghai, you were paying $122. That is a 44% difference. The source asks a pretty simple question. Which one of those prices is real? So you might be thinking, was this just a crazy one-time event? Well, according to the source, not a chance. They argue that if you just zoom out and look back over the last half-century, you can see the exact same playbook being run again and again.
You can see the alleged pattern laid out right here, 1980, 2011, and now again. The source claims it's the same tools every time. Margin hikes from the CME, sudden moves by the Fed, all perfectly timed to absolutely crush a historic rally in precious metals. You know, like they say, once is an accident, twice is a coincidence, but 3 times, that's policy. And all of this leads to the biggest question of them all. If this was all scripted, if this was deliberate, why? What could possibly be the motivation for coordinating something so massive and so destructive?
The source puts forward a pretty chilling motive, a giant wealth transfer. They point out that while all the retail investors were dumping their holdings in a panic, central banks around the world were on a quiet buying spree, picking up a record amount of physical gold. The argument is simple. You crash the paper price to create a fire sale for yourself to buy up the real thing.
And really, this source argues it all comes down to this one question. If gold and silver are just dusty old relics that don't really matter in the modern financial system, why go to such incredible lengths to control their price? They suggest that the sheer intensity of the attack actually reveals the true value of the target.
And this brings us to the source's ultimate conclusion. It's all about protecting the current system. Precious metals, you see, are real money that you can't just print out of thin air. And that makes them a fundamental threat to a financial system built on paper currency and debt. This demolition, they claim, was simply an act of self-preservation for that system.
So after walking us through this entire alleged script, the timing, the players, the data, the motive, the source leaves its audience with one last, very provocative thought. Knowing the playbook they claim to have exposed, what's your next move? It's a question that really forces you to think about who you trust and what you believe truly holds value in the end.